Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. We've got a lot to go over. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. I'm going to move as fast as I can. Those of you who've been following the stream, it is sequential. We follow the market every day, and based on the behavior of the market, we can, by using the auction, at times get in alignment with it, and it's based on structured trades that are available to all of you in the Bookmap Discord Trader Lab community. And it's a community with no cost. And it's all about the business of trading, understanding what the business is, how the market works, why it does what it does, and how you can potentially build out the business of trading. Most retail traders do not really know the business they're in. They think it's a business of get a software package, plug and play, indicators, time frames, and somehow it's all going to come together. And, well, it may or may not, but for most retail traders, it doesn't. Why? Well, you might be able to get those answers in the Trader Lab. The other problem we have is developing traders, and no matter how long you've been doing this, you're always developing. Is we all have winning trades. And I think that might be the one thing that undoes most retail traders. They have winning trades. Now, you would think, well, isn't that the object, right? Well, the object is to have a statistical edge, not to have a winning trade. Everybody has winning trades. Gamblers go to the casinos and they have winning hands. But the casinos extract dollars from the gamblers. Why is that? Because they're not concerned about the gamblers winning. That's overhead and cost of production. They only play games that have an edge that favors them. Does it make sense that if we are going to be in a gaming type business, that we use a successful business model, which is gaming? Not sit with the gamblers and have winning hands and think that we know what we're doing. Maybe, and that's why we have winning trades. Even if you had no approach, you'd still have a winning trade. What does that tell you? Maybe it suggests that trying to get more winning trades doing a process that doesn't have an edge does not potentially create sustainability. And that's why the Trader Lab exists, to help you understand the difference between the fantasy of trading and maybe what the business actually is, and then how you can navigate a random environment using structured trades and a process that attempts to stay in alignment with participant behavior. That's a Trader Lab. You're all invited, and there is no cost. And there is a link in the bottom of YouTube if you want to visit Trader Lab, and it's a community of like-minded traders. So the idea of Trader Lab is that everybody works together to do something to leverage that experience. Mine is 45 years, both professionally and otherwise. Our senior trader has over 50 trades and years, and it's everything in between. I think it would be a good fit for almost anyone if they're serious about doing the work to create a business. And of course, past performance is never indicative of future results. You've got to do the work Your mileage may vary, and it's not a shortcut. It is actually an education in this business and what it takes to compete at a high level. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. If we get into real time like I do in most streams, when I do, we will go there and talk about it. The other part is, please post your questions in YouTube and the Discord Trader Lab community chat. If I don't get to them, I will get to them in Discord after the stream. So if I can't answer your question in YouTube, use the link in the bottom of YouTube. You can visit the Bookmap Discord Trader Lab community. Let's go. Now, grab your pen and paper, take a couple of notes. Now, this is posted before today's RTH Open. I will have to point some important elements out to you. Remember, every day, it's almost like I probably sound like a broken record, but what I am is consistent. The market is random. Something needs to be anchored. Remember how casinos operate. They play their games exactly the same way. They don't control the outcome of any specific hand or game. They only control how they play the game, and they only play games that have an edge. So how do we get an edge? Let's look at the recent behavior. Now, this is the auction. Now, what the thing about the auction is, and what I've done is this brackets, this is a swing high, this is a swing low, and we had a high target here, which was a short, and we had a low target here, which we covered. Luck of the draw, or is there some skill involved? I'll leave that up to you. Now, what happened up here? Swing high, and then every day we're moving this out, and we're moving it out to look at where the swing might be this is called the balance area. So what I know is in this, too high, too low. So I put a profile around that to see the volume distribution. Once I start trading inside in what's called balance, in other words, two-sided trade, it's a compression of energy. Sellers are up here, buyers are under here. What else do we know? Sell stops are here, sell stops are here, sell stops are there, sell stops are there, sell stops are there. What does that say? Well, if this is too high, then what about these longs? It says they might go under the bus. That's what happened yesterday. And what does it say about the shorts that are sitting from here and have their stops above here and here? They might go under the bus. And that would take us up roughly to 8, 9-ish or higher up in here into the 20s. So that's the lay of the land. And what do we know about this? There's all these shorts have their stops up here. So eventually, and this doesn't mean it has to, that's our target. Now let's come back to yesterday. And there's a little more to this. What happened yesterday? Well, okay, we opened, we gap lower, it's the end of the planet, right? And what do we find? We get early selling, and then we get buyers, and we come back. So this distribution, this low, yesterday was over here. So we took it out, but then we came back in. When you come back in, this level, 86-ish, is the high volume for this distribution of participant behavior. And it was all concentrated here. So if you find, and remember how the market works, it's a shopping experience. You go to the store, you throw it in the cart if it's on sale. What happened down here? It was on sale. Where's the retail price? It's here. What's the potential? If we find too low, and by the way, look over here, 22.5. What was that? Too low. Where do we come? 23.75. what is this? Let's think shopping. If this was too low over here and we got our buyers, is it possible the market can come down and check this price? And of course, it can do anything. Remember, we don't know. But what we do know is there were stops under there. Well, stops under there, of course. Stops under there, stops under there, and then boom, 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 right? Well, what did we find yesterday? Too low. And if we find it on sale, think about shopping. Oh, throw 3 in the cart. Love those S&Ps when they're on sale. And then what's the potential? Well, if we find too low, it's to come back to the median or the fair price. This is the high volume. And in your store, when you shop, high volume is the retail price. Buyers and sellers to agree to do business. But there's another part to this. Where are the stops? Here and out here. So if this is too low, isn't the job of the market to try to figure out what might be too high? What's going to attract the sellers? We found the buyers. This is retail. Where do we stretch out and maybe then come back here or keep going? In other words, we don't know. That's the higher time frame. Now let's go further. And if you have questions, please post them. And remember, these streams are available exclusively to Bookmap Discard Trader Lab participants to reverse engineer, etc. Now let's come to Bookmap. Now this is just prior to the RTH open. Let's look at our levels before we get there. So I can probably need to take you back. Let's see. Yesterday's low. And what was yesterday's low? You do remember it was that point of control area that was too low previously that we had rejected. That's why this level is sitting in here. And there were stops under that level. I got to take you back because this is how you would potentially, this is that level. That's why it's in my Bookmap. This is the auction. And I don't know what it'll do, so let's not get carried away. I know is there's stops under here. And I know this was too low because I lifted. So when I come back to this level, I'm looking at it because of the behavior that took place by the shoppers. Well, if it goes on sale again, you ever go when there's something on sale, you buy it, and then for some reason they put it on sale again? If you thought it was a good value or a deal or undervalued or on sale, which is what a sale is, would you buy it in the store? Why wouldn't you do it in the financial market? Why wouldn't you do the same thing? Isn't it the same? So that's where that level comes from. Stops were under there. We didn't do it. Now, here's another piece. I'm going to try to cover a lot, and I hope I can. In the Trader Lab, when you build out a trade plan, part of the process is a conditional narrative. And it goes like, and it's verbal. And I came up with this stuff because I built trading systems, and there was logic in randomness. If this, then that. If not, then what? If I come down to this level, I have stops here. So if this, I get this sell-off, then maybe, and I don't know how far it'll go. You know, this is part of the thrill. Then that. Well, if not, then what? If this is too low, which I won't know until I do the test and reverse, then what? If this is too low, then what? Then up. Then where to? Then back to the high volume level. Which is, make sure I got these, whoop, wrong one. I hope I have this on my chart. Hold on, guys. 88, 89. Yeah, here it is. This. Okay, so this is the retail price in that higher time frame. Then if I can get higher, I have, this is called a single, and you've been following the stream. It's been on the chart as a target. 6,100 actually is a target. This is a target, and then we have 23. Not trade recommendations, clueless. Now, this is all before the open. So in the Trader Lab, you would have a higher time frame chart which I showed you, and then you would have yesterday's RTH session because of the levels, and then you have the developing time frame. And then we have the ETH, which gives us information on the most recent auction. Yesterday's high, ETH, overnight volume point of control. This is the retail price from the ETH. So that means what's below us might be too low. Yesterday's settlement is around 72-ish, and yesterday's naked volume point of control or retail price is here. So what do I know? What's below me is too low. This is the retail price from the ETH. I'm sorry, from yesterday's RTH. This is the settlement. This is the retail price from the ETH, and I have a naked volume point of control above me, which is a retail price we had left behind. It was a target for yesterday. We didn't get there. ETH high, and all the targets up above for all the reasons. Now, all this is what you're going to do if you have a trade plan. If you don't have a trade plan, you're just going to gamble. And that's okay too, because you might as well enjoy yourself and get the thrill and the dopamine and all that. But that's not really what this is about if you want to be in the business. If you're going to be in the business, you have to do what others don't do. And you need a market understanding. So this is the RTH open. If you have questions, please post them. I'll do my best. And remember, if you have questions and if I can't get to them, and I spend an extensive amount of time in the Bookmap Discord Trader Lab community, tremendous amount of posting, not only by myself, but the members and the participants. So you can get answers there. There's a library of webinars, and there's 60 PDFs of these trades. They're called structured trades that you can use as a blueprint to build out a plan or the business of trading. So let's look at the first behavior. So this is what we know. We're opening here. We have yesterday's high. We have targets above. And often what the market does, now this is called market mechanics, and I went over it at the top of the stream. The market goes up to go down. The market goes down to go up. And it sounds probably ridiculous. But what happens is the market always rotates over itself in all fractals and time frames. So if we get selling first, which might only be profit taking, think about it. The longs from yesterday, you come in long, you've got the champagne on ice, and then what? You see selling? Well, there's possibilities here. We can go up, get longs in, breakout traders, and then we rotate down and take them out. So we go down. So you can go up, you can go down, you can go down first and then go up. I mean, you could do anything. The thing about it always to be thinking is how do these pieces fit into different time frames or fractals? I don't really experience the market in time frames when I get into the intraday time frame, as we call it, because there's no time here. Let's watch. This is called developing volume point of control. This is the current retail price. It starts at 0 at the RTH open. What does it say? This is language. I don't use your standard indicators like most retail traders do. So I did, believe me, early in my development, I thought that's what trading was, just like everybody else does. And it might be because it's an interpretation of price and whatever derivative of price you care to use. I found that I had conflict, ambiguity, and then you start adding time frames in. Something's going long, something's going short, something is chopping. What is it all doing? So I found that if I lay out levels based on the behavior of the participants, not my indicators, so I don't use them. And now I forced myself to learn to read the behavior of the participants, and I can see it in order flow. And even before I had order flow, and I got Bookmap, I think in 2015, when it first became available, because I could never read the dome, not my skill. So when this came along, I then was able to get more granular. And as Bookmap developed and evolved over these years, all these years, it's just gotten better and better. And for me, I learned the language. So let's look at the language. RTH open. Now we're open 15 seconds. Developing volume point of control. This is delta. Green bubble means more buyers than sellers. I know you know that. And then there's other parts here. selling icebergs. This is a buy stop. This is a sell stop. Selling icebergs. Okay, so you kind of get it. Selling iceberg, buying iceberg. VWAP mid. This is called VPOC migration. Now, there's a couple things you can do with this. And this is all subject to your trade plan. So there's not like do what I do, because I'm not going to do what you do. I'm going to use structured trades, or at least what I share in the stream here are structured trades. But all a structured trade is something that might have a statistical edge, and we are in a random environment as far as any specific rotation. In other words, if we go up first, are we going to get targets? Are we going to go up? And then we're going to get sellers. And then it's going to rotate down and take the opening swing low out before it either goes higher or whatever it does, right? Well, how about we don't know? How do you like that? Can you operate in an environment of randomness? You have to in trading. You cannot predict anything. And our nature is to avoid risk and be able to predict what's going to happen. We look for confirmation, which means we're either getting in late, or we're not taking trades, or we're conflicted and we thrash. You're always going to thrash in uncertainty. But when you add more elements, you add more thrashing and more paralysis, I believe. And I can only speak from my experience. I'm not speaking from yours. So what is this? VPOC migration. And this starts at zero. So this right here is the retail price. But I'm seeing my buyers. Now, in the Trader Lab, and I'm not saying these are trades anybody should take. I'm going to show you the trades, and win, lose, or draw, and it's all random. You have to have a plan. So what do we know? Let's talk about what we know. So far, we know this is retail from the ETH. We know this is yesterday's high, and we know there's a high probability of taking this out, and we know there's buy stops, and we know this is the retail price in the higher time frame. This is what we know. Let's see what we do. Now, subject to your plan, and this is where it is subject to. This is not anything more than structured trading and Trader Lab processes. You don't need to take any trades. You take your trades that have an edge. As this is going down, I have no trade. But I see the delta, and I see the sell stops. Now let's go into microstructure. What is going on here? Now, I have no idea what's going on right here. I'm thinking, oh, it's going lower. But right here, this is the highest volume. Now, why is it? Because there's more volume here since we started zero than there was at zero. He says, boy, he's smart. Now, I break high with my buyers. This is my resistance at the moment, because we left it in a microstructure. It's too high. Right here, I break high. It's my resistance. My support is here. I get VPOC migration. It is suggesting potentially too low. Now remember, it's my opening swing low. This is not a good structure. It's a weak structure. So I always go over the opening trade is a separate trade plan. And you need to see, I believe, the way you think about this is higher time frame up, micro time frame, setting up a long, and the potential for counter rotation with targets here and here. So this sets up the first long in the Trader Lab here. Resistance is here. So this is microstructure. Now this is very advanced and very fast. I mean, we're in here like 20 seconds. So you have to be prepared. VPOC migration. All these are longs. And you're trying to go here for a scale and then there. So let's just see. And remember, opening swing. So let's see what it does. So this is your primary target. So first target, buy stops. Thanks for playing. Broker sends you a gift basket. Then here. Okay? That's the first. Let's watch. notice we come here. Remember? And if you missed the top of the stream, all this was reviewed before we got here. Now, VPOC migration. What does this say? Let's look at the language. Oh, we're going higher. What does this say? Oh, we're going higher. But what happens? We don't. What do we do? This is a primary target. What have we done? Don't forget, this is yesterday. This is our primary target, 88-ish. It is the return to balance. Then, if this is too high, we can rotate and the idea is go to the other side of balance. The way it tends to work is outside in, outside in. And remember where the stops are, right? Okay, now we're coming back. You need to keep the pieces in mind. This is our return to balance. This is our VPOC migration. Now we have another structured trade in the Trader Lab, which I'm going to share with you. This, the idea would be to do that. What did we do here? We did that. So if this, then that. If not, then what? Well, we held this, so this is good, and we leaned on this. This is a long. That's a long. All these are longs in the Trader Lab, structured trade. Now, targets here, structured trade, Trader Lab. That's a good start, I think. Now, what happens here? What do we want? Well, what you want and what you get, in trading is. So this is what we're looking for. ETH high, over 90% probability we take it out. Oh, joy. Now what? We don't. But what do? We pull back to VWAP. What does it suggest? This is language. What are we doing? Low volume node. What is a low volume node, you ask? It's a separation between two distributions. So this here, with this volume point of control, is too low. You can't buy it here. They sold out. Now, if you want to buy an S&P, this is the retail price. But what might happen? Here, let's look. We have longs in this leg. Remember, the market goes up to go down. The market goes down to go up. Where's my next trade? It's here. VWAP and mid, and there's alignment. Let me show you the alignment. All these pieces get put together. It's called the auction. This is what's called a low volume node. And I narrated this. Well, I narrate so much in Trader Lab, I'm going to say I believe I narrated it, and I can't remember. What are we checking? Yesterday's high. Low volume node is an outside edge. And what's important about it is we left this. This is called a distribution. It's a consolidation. And once we broke away, we started a new one. So the language suggests too low. So this divides them. That's why it's low volume, because we ripped through it. This creates volume. This, chop, 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 chop. This is a run. It's a directional move. The market hasn't had a chance to pause and think about it. Well, if this becomes too high, which you don't know until you break under here, then the market can come back outside. And if it comes out here to this outside edge, low volume node, then we have a structured trade, which is called VWAP to VPOC in alignment. Remember, the auction's an alignment thing. And there's yesterday's high. This is a long, this is a trigger. Scale is here, and then you're looking for the ETH high. This is a structured trade. Now, right here, what do we run into? Now, nobody knows this. This is just part of the thrill. So this is a structured trade. This is a structured trade. They're all long so far. Now, here, we're looking for what? This. And then what? Warning Will Robinson moment. We find too high. So this is absorption up here. So when we come back here, What do we know? There's stops under here, and of course, there's stops wherever. And this, by the way, let me label this variable high volume node. So this is potential support, but I have my stops under the opening swing low. I have to stay conscious of that. So let's watch. So right here, this needs to hold this area. This is problematic because it might be saying too high. Remember, shopping. Long to there, looking for that, no bueno, come down. What's under here? Stops, the mid, and this is our last level that was too low. Notice the behavior. What does it have to do? It has to get over this. It doesn't do it. Now, here's the other piece. What happened here? VPOC migration. What does it say? Follow the language of the market. Too high. Why? Notice the behavior. Now, this is the auction. So what I do and what many traders in Trader Lab do is attempt, underline, to stay in alignment with the behavior. It isn't about our indicators. I mean, typical, it crossed over. What do I do? It's about behavior. What's the behavior? This is the retail price, but I left it. If I get buying, then I need to be able to return to it. That's the idea. It's called mean reversion. But when this drops down, it might be saying, that this is too high. If it's too high, then I'm going to rotate. And if I rotate, then I've got this, but what else do I have? The opening swing low. So then I have to be thinking about, I've got longs here, I've got longs here, I've got longs here. And if this is too high, then hasta la vista potentially, and we'll see you later, we'll send you a note. Watch the behavior. Variable high volume node. What is this? It might be, subject to your plan, a long in the Trader Lab. Why would it be a long? You're asking. Here's the answer. If this price was too low, and now this price is too high, and now this is the retail price, there's a couple possibilities. One is we check this price and we rotate off it and come back here. The other one is we're going to take all these longs out. And I don't know the answer. So subject to your plan, this could be a long. And then you're trying to get back to mid and VWAP. And then here and out the top. Let's see what it does. If you took this long, and this is a structured trade, you have to scale here. The reason is, if we don't get, we could get sellers here. And if we get sellers, so you would get long. If it fits, you got to have enough range. Kind of got to use a shoehorn. And what else do we remember? Low volume node. Yesterday's high. We broke out of the upper distribution. And now, we had to get up here, we got to get through this. Wasn't that the reason for the long over here? Well, if I break out of the upper distribution, it's just the inverse of the long over here, which was coming out of the lower distribution, back to the LVN, up to there. Well, if this is now too high, I break low. I can check this, which was too low, and come back and check the same thing, which is this. Too high, we're out of here. So if you took a long, which is a structured trade, you got to scale here. Because not only do you have the structure, but you might get selling at the mid and the VWAP, right? And don't forget what else opening swing low, stops. So the possibility is long here to there. Trade, if it qualifies for you, you must scale here. If you don't have enough range in your trade plan, you do not have a trade in the Trader Lab. If you take this trade without having the range to get risk neutral, you are a gambler. And I always suggest go to casino, get the cocktails and the ticket to the buffet. The business of trading is knowing where your trades might show up and then having a triggering structure an entry and the range to get risk neutral while you're attempting to go to targets. That's the business. Now, if you do something different, that's your, as they say, your business. We take out the opening swing low. Now it gets more interesting. Do you have questions? Now, here's something. And at the time, now one of our traders posted that they got long at 72. Overnight mid, an outside edge. And what else is it? A naked volume point of control. What is that naked volume point of control thing all about? What is the VHVN all about, which operates the same as a naked volume point of control, but it's moving because we're in a developing time frame. This is left over from yesterday. This is the retail price. If I find too high, where might too low be? Might it be there? Maybe. I don't know. So, where is that level? 72. Let's look. Now, this is a buy sweep. This is an outside edge and a higher time frame. So I have alignment. Watch. So right here, I've got location. So let's look. Let's go look at trigger now. Now, I read this and I posted this in TraderLab, but I did not take a long. And let me tell you why I didn't. Then, of course, in hindsight, you go, gee, that would have been a good long. Absolutely. The reason for me was 78 now is our low volume node out here. So I looked at this and I said, well, we tested this. And if it's too high, we can come down here, but I have a low volume node here. So I'm going to label this because until we clear that node, I do not have a trade for me. I'm just talking me. And I point out in the TraderLab, basically, we're back in this double distribution thing. In other words, too high. Remember, too high, too high, too high, too high. Where's too low? Maybe it's out here, maybe it isn't. Where's my resistance? It's there. So what I was looking at was when I see my buyers and I see a long, which I did, then if I come out here, if I can't get back outside of this, then I'm going to come back to here, back here. So that's what I know. After that, I don't know. So let's see. Watch the behavior. Let's see what we see. VPOC migration. Too high. Now, what do we think? It's either going to come here and reverse or go straight down from here. Let's pick one. What do you think? Too low. So now where's our resistance? It's here. Okay? Let's see and you got mid and VWAP. Let's see what happens. I got to label this, by the way. The reason I label these things is because it's shopping, and the shoppers move around during the day. They go to different locations and do different things. So we have to keep track of these guys. So too high. I got to label this one, by the way. Get over here. So this is what I do. So I don't, because they scroll off the screen, and I'm primarily focused on the order flow while I also do watch other levels. So this now is the new retail price, but what I know is the following. In microstructure, right here, I broke high, so there's my buyers. I pull back. This is a test of that and that. It's a little distribution. You could see it here. Let me draw another little thing for you. Now I do this. I'm not drawing all over my chart. I do this so you can see structure, because this is really what the auction is all about. So here, and the low should be right there. I get my buyer. and I get my pullback. So right here is my support, right there. If I put a trade on, my stop's got to be under here. But right here, I'm thinking, so I got support and I got resistance here. If it breaks down, it's got to hold this. If it goes up, it's got to clear that. That's what I know. That's all I know. I'm not claiming anything else. There, you can see it. So, and that's created by this move because we ripped. We didn't auction. So if you rip, you can come back and check it. That's why, for me, I did not take this long. So it's got to clear this, and then we got our VWAP and all that. And it blows right through it. So now I'm going, okay, great. You know, I got to get long. So now I got to look for a long. Let's see if we see it. Watch. So where's our variable high volume node? It's here. I've come back to my retail price. I've run into, let me get this out of here now, back to yesterday's high. And I have a variable high volume node sitting here, right? So that's my resistance. This is the new retail price. This is too low. So I have a couple choices. If it rotates outside, this is my support. This is my new low volume node. It's right there. Of course, it didn't move. Why make it easy? I'm going to come up in a moment and look and see if you have questions. I think that's at 77 maybe. You'll get the idea. It's this. So if now this is too low, and we know that is too low, maybe, then this is my new support area, right here. And this is my outside edge. So I'm going to be looking for longs here because now I'm back on going for the ETH high. So all I've done is we took out the opening swing low. Thanks for playing. And now we want to look for long. And where do we come? Outside edge of the distribution. And what is this called? There's a name for this behavior. It's called mean reversion. And I always like, we laugh about it, and I always have to say this. It's mean because where's the outside edge? Let's look at where the outside edge is. Let's look at where the outside edge is. What's this? Let's take a look in the microstructure. I'm taking you, it's almost like let's go where no man or woman has gone before. I'm sure they have, but they don't talk about it. So what is this? Chop, 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 chop. What is this? Sellers are there. Buyers are here. What happened here? Buyers are there. Buyers are there. There's the buyers. There's a sweep. Suggests a counter rotation. It suggested it here too. Didn't do it. I mean, nothing is all the time. But what is important to me? Location, location, location. Think real estate. And there's no precision. When we love precision. There's no gift of precision. So this is support. This is support. I break high. Test, break high. What is this auction? Sellers were here. The buyers are here. The buyers are here. Off you go. Then what? Where were the buyers? The sellers were there. That's why you got that rotation. This is order flow. When I take them out, then I know that I got buyers here and I have buyers in here. If I come back to this, where the sellers got thrown under the bus, and I get my sellers, and I get my absorption, which is the icebergs, I can buy it here. And my stop needs to go under here. It could go under there. It's up to you, right? And now I'm going to try to come here. There's my scale. So long in here, scale here, and then north by northwest is the idea. And where's our next target? ETH high. See? So long to here. Now there's more. I don't know if I should come up for oxygen here and check your questions. There is more. 9 a.m. Okay. Sorry, guys. How we doing? C. Chun? Hi, welcome to Trader Lab. You just have to be watching these streams, and what's conflicted for us is thinking in multiple time frames or fractals. You could be thinking long in a higher time frame, but in the intraday time frame, which is where we execute as day traders, we have to be fluid, but be conscious of the levels because the market is fractal. So if we had a substantial reversal yesterday and you know the market is short, not only yesterday, but shorts are in here from previous highs. If who's trapped, it's always who's the weak side. Well, the longs were the weak side yesterday, and they got taken out, those stops. And review the stream, you'll see the idea. Then if we come across the range and all these shorts, which is why we had the squeeze yesterday, and we come back to the fair price in the higher time frame, what does that leave us? Going to the other side to look for too high. Now, this is the last long, right? Okay. Now, for me, if the trend is up, and this is subject to your individual trade plan, I don't take shorts. Or let me put it this way. In the Trader Lab, if you're a developing trader, it makes sense, and again, it's up to you, to stick with the dominant side. And I think we might agree the longs are the dominant side. Why does the market counter rotate? Because there's stops. And if you run out of buyers, and let's see what that looks like, you'll notice how the volume dries up as we come up here. Why is the volume drying up? Because you need a can of tuna for the casserole tonight, and for some reason, you go down the street because you don't want to go to supermarket, and it's $3 a can. Well, you may buy it because you got to have it, but you'll notice there aren't a lot of shoppers coming for the tuna at this price. So what does the market do? If we run out of buyers, and this happens in all time frames or fractals, we'll counter rotate. That's what I know. And I don't know where that'll happen, but I can see it happening here. See, there's less volume, so less buyers. If I run out of buyers and I have iceberg selling, so buy stops coming out, thanks for playing, and I get my sellers, at any moment I can counter rotate. So trailing stops, trade management. Then what happens? I pull back. Now, this is the developing volume point of control. So there's a possibility to hold here. Or, since I have a leg and I know support is here, and I know I have a structured trade in the Trader Lab called the VWAP, the VPOC trade, I'm going to be waiting for my next trade here. And what's it aligned with? This. What is this? Too low. What's this? Mid and VWAP. This is a long structured trade to there. And then going for this. 6,100. It's been a target indefinitely. And this is all posted in Trader Lab, and they're all on the chart before the fact. So let's see what we do. Next long structured trade. Here and there. And there's more up above, but we'll see about that. Yeah, I don't know. So this is just what's called structured trading. Target. Okay? Remember, all these are on the price map. And this is not about predicting. I really you got to get over this idea about knowing anything. You really need, in my opinion, to know you don't know, because that releases you from this ego-driven needing to know and being right. It's ego and it's fear. Now, fear is a constant for us because we're wired to avoid the unknown. You know, it's like, oh, a red light. Well, let's go through it and see what happens. Really? And if you're doing that, don't tell me about it. Variable high volume node. So as a species, we're wired, to avoid fear. To avoid fear, pain. I should say fear is triggered by the unknown. And when you're in an environment that is completely unknown 100% of the time, what does that do to your psychology and your mental state? Well, it makes you a lunatic. It's what it does. And you can't act in your own best interest because your brain is being hijacked by a more reptilian primal wiring. So this now is the new retail price. We're going to label it variable high volume node. I saw a question there in YouTube, and please give a like in YouTube. What's the difference between a naked point of control and a standard? A naked point of control is a high volume price that was left behind from a previous RTH session and it hasn't been tested. If we leave one of these locations, the market is basically saying, if it's a previous location, that's too high, I'm out of here. And then we go someplace else. And then if we find too low, wherever that is, it's either a target coming back or it's a target, however happens. And then this is a developing volume point of control. So this is moving on an intraday basis, but the market can still come back and check levels just like it does in the RTH or in the higher time frame even. So this is what trading in fractals is. We're doing a process inside a process. Think Russian dolls. Anyway, I hope that answered your question. Does this make sense? Please give a like if you're in YouTube. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants. Reverse engineer, screenshot, replay, and the rest of it. And I also advise, and I hope you guys are doing this, whether you're in Trader Lab or not, is that you get a recording software, and there's free ones on OBS is a good one, where you narrate the development of the market. It's the only way you can see what you're doing in the moment. So this is a narration. And if this is a foreign language, we want to read it. I don't use indicators, so I am forced by choice to understand what's happening here. This suggests a counter rotation right here. Selling icebergs and a buy sweep. This is a sweep detector. Doesn't tell me to get short. It happened here and the market went up. But what it tells me is what might happen. Doesn't tell me what will happen, because then you're looking for certainty. If you're spending your time searching for certainty, in my opinion, you're wasting your time. It doesn't exist. If the casinos could figure out certainty, they would be the ones to do it, don't you think? They don't have certainty. Why do you think you'll have certainty? The reason you're looking for certainty is because of your primal wiring. You don't understand the business you're attempting to create a career in, which is completely uncertain. So if you're trying to solve for certainty, I think you're, as they say, barking up the wrong plan. Outside edge is here. Low volume node. Let's label it. So how does this work? You're asking. I'm going to go, that's a great question. Well, first of all, it's 100% random. So that's how it works. The other part is, let's come back over here. Support is this micro high volume structure. That's one. You can see the little node sticking out. The outside edge of this is out here, low volume node. This is too low. It's another high volume area. Let's just watch these little things. See if it makes any sense. So too low. High volume is here. It's too low. So what I'm doing is I'm looking at these micro auctions. This is too low, too high, too low, and that's a retail price. If I leave it, it might be too low. As I'm going up, it's doing these micro structures. This one is coming from this little thing right here. It's an auction. Sellers, buyers, right? This is an auction. Buyers are here. Sellers are here because we broke down. If I take it out, this now becomes potential support. I'm going to throw another little line on here. And here's my outside edge. So if I come outside, how do I get long? Well, let's assume for a moment that the market's going up. If it is, how might I participate? Let's look. Remember, we're the outside edges. And everybody takes stops, by the way. I hope you don't think that you can get away with that, because no. Where do we come? So this is my outside edge. And the outside edge is typically where we're going to have stops because, and also it's not auctioned. Let me see if I can get this off of here, just so you make it a little clearer. Liquidity marker, really cool. But just to clean it up for you a little bit. So when we ran this, it wasn't auctioned. That's why, and there's no real volume there. The volume's created in the chop or the auction. This is just rip. So once we get through there, then if we come back here, it's an area to get long. But I don't buy this because the idea is to come outside somewhere. And remember, it's all random, okay? So my next trade for me is to be looking in here because this is a poor area. And the last place where it auctioned and it was too low is here and here. So this is support based on the profile, Low volume zone. And now I'm looking for a trigger. Right there. So now, how do you get into this thing? Well, first of all, I'm leaning on this. That's my support. I'm now at my outside edge. And if I get long, where am I going? You're asking. How about there and there? Here and here, high volume. This is called mean reversion, outside in trading. It's a plan in the plan. How do you get long in a market that's going higher? Have you ever thought about it? Do you buy the high? I've done it. Fortunately, probably 44 years ago, but that's besides the point. And I'm sure, and I've done it obviously a couple times, gotten real lucky. But most of the time, the only way I find that I can get involved in a market that I think has upside potential is to wait for a counter rotation. Now, advanced traders can sell this into the counter rotation, into the stops. Developing traders, if there is an actual directional move, should only be taking counter rotations as continuation trades. Now, if you need the dopamine fix in the action, again, wrong business. It's about edge. Do you have an edge taking shorts or do you want to take longs? And I'm not saying what's right or wrong. I'm asking, what do you have? So if this is support, where is resistance? It's here, right there. Now, continuation. Lovely. Support, trade management opportunity. So let's look at the microstructure. Long, microstructure, break high, buyers are there and there. Come up here, microstructure, break low. Where's support? It is here. Any reason to think it's not going higher at the moment? No. But what happens? Let's watch. What do we do? Now, I have no clue. Don't think I know. Don't know. Not my job to know. But let's look at structure. The high is here. High of the day. Right there. So where do I think I might go? Well, if I get long there, my next target is going to be ahead of the high of the day. And then hold for targets above. And where's our target, by the way? We have another target. It's up here. Not a recommendation. This. And who knows? Doesn't ever have to go there. That's not our job. We can't predict. We only know the auction. We know what might happen. Now, the other part of this is trade management. another conversation for another time in the Trader Lab, and you're all welcome. Now what happens? Too high, and we break low. So, and we come through support. So now the possibility is I'm under my low volume node. Maybe I found too high, and now I'm going to be doing a rotational trade. So let's see what happens now. I haven't seen any of this, so who knows? See? So for me, longs would be over at the moment, and I'm in two-sided trade. So what I'm going to be doing here is, if I take, remember how the market works. There's all these pieces that, it's part of the joy. Market goes up to go down, and the market goes down to go up. So here I have the VWAP, and we have a trade in the Trader Lab. It's called VWAP to VPOC. So if we think the trend is up, let's see if we got this trade or not. I don't know. I haven't seen any of this. Oh, yeah. So this is along in the Trader Lab, and it's called VWAP to VPOC. So what you would do, with the volume point of control above us, and we're above this balance area, everything is suggesting longs. This is a structured trade. So, and here's the trade. First of all, here's your bounce. I get a buy sweep here, which suggests the counter rotation. And this is what has to hold. My micro high volume is right there. There's my VWAP, and this has to hold. So when it comes back down, here is support, and there is support. Right here. So if you bought this, I always say in Trader Lab, you've got to give it 2 to 3 ticks. And the reason for this is we had buyers here. These guys were absorbed. That's why you got this. Buyers are here. That's why you got that. There's your trigger. Now what happens here is I have a sweep, which sets up a potential counter rotation. My liquidity comes into the book, and I get a sell sweep. Buy sweep, counter rotation. Sell sweep, liquidity. Stop is below here, a couple of ticks, long. So you're on your long, and now you've got to try to scale. Where is that scale going to be? It's going to be here. Ahead of here, called the IB high. There's your scale. Now, then you're looking to come across the range. There you are. Last trade. And now we have VPOC migration. So now, for this to go higher, we've got to come across, and then this is the next target up here. Not a trade recommendation. Let's see what it does. Now, do you have questions? And thanks for your patience. This is the reason I do this, instead of just saying, oh, look at this real-time trading, which we can do, is if you don't understand how the market works, then what's the point? I don't need to stream, and you don't need to spend your time here. But if you can learn, and takes time. It took me too many years, and a lot of the time I spent was trying to fix defective process. But with random winning trades, you think it's just make it better. Is that what you think? Well, I believed it because I had winning trades. The gamblers win, but they don't have an edge. But they think they're going to win. They do win intermittently and randomly. But the house, they're building larger casinos. They're giving you the cocktails and the ticket to the buffet. They pay the gamblers, and maybe they'll give you tickets to Adele. I mean, how can they do that? Because they only play games that have an edge, but they have no control over the outcome. They only control how they play the game. So I do this so you can understand the business or the game. Then it's, where do you participate? That's what a trade plan is. And just like the casinos, you will take stops. You will pay the gamblers. I take stops every day. I'm about as thrilled about taking a stop as you are. The difference is I have to take the stops and I have to take the trades where they align with my plan. If I don't take a trade that is not in, if put it this way, suppose this is the ultimate location and I don't have a trade here, then I don't have a trade. That's the end of it. But I do have a trade here as long as I can get risk neutral. Then here, and if I get through here, out the top to where? There. That's my plan. Is it going to do it? I have no idea. Do you know? Nobody knows. So let's not put our energy into knowing. Let's put our energy into solving for randomness. Questions? Please give a like. Well, thanks, J55, and welcome to Trader Lab. Are you guys tracking? How are we doing in YouTube? By the way, YouTube, if you're interested in the Trader Lab, there's no cost. In fact, there's a link in the bottom of YouTube. If you want to learn this methodology, you can learn it. I believe anyone can learn how to trade if they do the work. Most of us are not looking to do the work. We're looking to push the button. That dopamine is really enticing. Feels so good. That's what gamblers are doing. Well, our impulses take us out of the business because we don't have self-control. We lose it. And we lose it, so you understand, because the chemicals that are in our brain that are released, there's hormones, there's fight and flight, there's all this stuff going on. And somehow we're supposed to sit here detached. How do you do that? Do you have a problem with that? If you don't, then you must have had a lobotomy, because everybody is triggered because of our wiring. And many traders try trader psychology. It's like, oh, what can I do? The answers are in the statistics. Emotions are intangible and are chemically generated. Maybe we'll accept that, or at least let's accept that for the moment. If that's the case, then how do we get control over a nebulous emotional state that is constantly being generated by fear and greed? The market goes up. You're getting excited, euphoric. It takes a counter rotation. You want to shoot yourself. Look at what's happening to your emotions. What do most retail, or many retail traders do, I should say, probably most? If they get fortunate enough to get in, they get in late because they're looking for, quote, confirmation. Are you looking for confirmation? And then they see this and they bail out because they go from, oh yeah, it's going up. No, oh my God, I better bail out and not take that stop. But they don't get stomped out, but they get out over here. Is that you? Welcome to retail trading. It's everybody except those who understand the business they're in. And then the solution is not what happens to this trade. The solution is having a plan that has a statistical edge. Now, when you have emotions, you're going to understand where they're coming from if you do the work. You're also going to understand that it's normal, based on our wiring, to be fearful. Okay, we're all fearful. That's normal. It's what you do. Now, what's the solution, you're asking? The solution is knowing that over a sample size of random interactions, that this trade has X% probability of going there to the high volume. And then if we get through to the low volume, of going there. The first piece of this thing is getting risk neutral. So the worst that happens is you scratch the trade. If you have a probability, in other words, a tangible number, it helps solve the lunatic problem. And I use the term lunatic because it's like Jekyll and Hyde. You don't know the story of Jekyll and Hyde, just go and Google it. Jekyll, it was like a dual personality. There was Jekyll, who was a doctor, professional, totally respected. And then there was Hyde, which was his other personality that would come out and take over. Hyde was a complete lunatic. So we can have our consciousness saying, oh, I'm going to get long hair. And then when this happens, your conscious mind has been really taken over by the lunatic, who is the reptilian brain, which is, oh my God, we're going to get eaten by the saber-tooth tiger. I'm out of here. Run. Is that happening to you? The way to battle that is a trade plan. And that's what we do in Trader Lab. And that's why it doesn't matter how long you've been trading, but what you may find, like I found, was something called Trader Groundhog Day. I kept waking up with the same outcome no matter what I did, whether I was using LA Wave, Fibonacci, Yakanashi, whatever that thing is. I did that years ago. I can't remember. I did so many things. I shared an office with George Lane. He created stochastics, oscillators. The Holy Grail finally showed up. Well, not so much. So you go down these paths and you oscillate literally between euphoria and depression. Why? Because we keep waking up with Trader Groundhog Day. I did a webinar on it. It's available in the Trader Lab if you're inclined. In fact, you're all welcome to visit Trader Lab. There's a lot going on in there. It's a very active community. And let me show you what these structured trades look like. There's 60 PDFs of these things. You can download them. Now, this is not, there's no course. What there is a leveraged community. Many different traders in here have taken the concepts in here and they make them their own. You can take this and you can reverse engineer it and create your own plan. And there are templates for plans that other traders have posted. There are statistics based on the research. It's the community comes together to solve. Because if you try to do this alone, you're going to have, I think, a tough go of it. The other problem you guys have that I never had, because when I started in 1980, there was no internet, no computers, none of that. So it was very isolated business. There was just no information. And there were no off-floor traders when I started being an off-floor trader. All my friends were floor traders, and they thought I was out of my mind. The other thing is technical analysis, as we know it today, was seen as voodoo. It was looked down upon. It was really something because everybody was in the fundamentals, And of course, fundamentals are important. And we didn't have the tools, So it was just such a different world. But the point of that is that you guys now are swamped with information. And if you go out on YouTube, or wherever you cruise, you may never get to figure out how to trade because you're going to be too busy buying everybody else's story. You have to find what you can relate to that resonates with you. So what is this trade? It's a long here to here. And then the other piece is going to be trade management. Where does this trade fail? It fails under here. Why? Because the buyers were here. There's the icebergs. The buyers are here. This is the counter rotation. What happened here? It held support. What do you do now? How about nothing? Unless you have a different plan. For me, here and out the top. Not a recommendation. If it does it, it's lovely. If it doesn't do it, it's just one trade with a random outcome. Can you deal with that? See, Van, you're in Thailand. I love Thailand. If it wasn't for the time difference, I would probably live in Thailand. Because I was thinking about it. Yeah, Slatterazzi, thanks. Yeah, we do have a 30-year bond auction at 12:01 Central Time, right at the end of the stream. So you might get some evening squaring up in front of that, and that can be a volatile event. In the Trader Lab, we work on trade plans. Now, what's a trade plan? Well, there's the overview that I gave you at the top of the stream. If you missed that, you definitely want to watch this stream. And you should be watching all of these. You can skip the open because there's certain things I have to say and disclosures and stuff if you've already seen them. But, or replay it is really the thing. You want to always listen to the disclosures. Remember where we're going, right? And when I say we're going, it's only a target. It's nothing more than that. This is a long. This is a long. This is a potential obstacle. This is your scale. So this is resistance. Where did it come from? Here. If you got long here, where's my resistance? It's there. That's a scale. If I get long here on the pullback to support, where am I trying to go? I can scale there, same place. If I get through here, where am I trying to go? Here. If I get through there, where am I trying to go? There. And where? Well, higher. And right here, there's fuel here. So I know if I can get above all this stuff, I get above here, then it's wherever it goes, because then we're out kind of in space. But I'm not too concerned, you know what I mean? I take it one rotation at a time. This is Trader Lab methodology. You can learn this. I believe anyone who comes to Trader Lab can learn how to trade if they do the work. I can lay it out for you. I can't do the work for you. And there's not necessarily, and here's the other part. There are traders in Trader Lab who may want to be trading these kind of rotations. Just me, based on risk reward, this is what I want to trade because I'd like to get paid for my risk. How many of these do you need a day? If you lose control, it's because you haven't done the work. And the way to gain control is to know the probabilities of one thing happening over the other. Not the outcome of the next trade, but the behavior and why the market might do something. The only thing I have found, for me, you may be different, is the auction, because it's the true representation of the participant behavior. And the auction is representing the behavior of the participants and the volume that goes off. If you go to the store and nobody's buying that can of tuna at $3, the market can't stay there because the sellers are going to lower the price until they entice the buyers again. That's what creates rotations. So if this price was too high and we lowered the price in fractals now, and I find too low, then where might I come? I may come back and make sure, is this really too high? Notice the liquidity stacking. So is this making sense? This is Trader Lab, and I believe you can learn this. I'm not saying you can do it because you got to do the work, but the Trader Lab is a community of traders that have come together. If this is not an isolated business, this is a business where you need all the help you can get. And because it is so counterintuitive, does that make sense? I'm not hearing a bell. I'm not, does it keep me calm? I don't hear the bell, so I don't know. I do have a bell every 15 minutes that goes off just to keep me conscious of time. I'm not sure if that's what you're hearing, a little bing, but I'm not sure. I've got a bunch of different alerts that go off. Let me show you the Trader Lab community real quick, and you're all invited. Well, maybe doesn't want to come on here. Hold on a second. I got to make it a little smaller. So this is Trader Lab. There's a lot going on, a lot of posting, a lot of charts, a lot of conversations, you know. I do tons of postings, all right. all we are doing in rotational trading is try to get aligned with the dominant side. In other words, this is really what, remember where we're trying to go is up here. And there's no precision. That's in my posting. I post during the day a lot, right? So that's it. I posted this. This is the volume profile. This single, which was our target coming up, this is that black line right there. That's a target. And then we have stops over this swing up here. So we have another target up here. That's the 20, whatever it is, 23, which we may or may not get to. So this is Trader Lab, and you can use the link in the bottom of YouTube. Really a great community, and there is no cost for it. Now, here's something else. Remember, I was talking about Trader Groundhog Day. I like to bring it up because how many years are you going to spend trying to get it right, which we all are, but maybe your process is defective. It's not what you're trying to do. It's a process. If it's defective, you'll never solve. You'll just have more of the same. That's Trader Groundhog Day. Trader Groundhog Day, right there. And then why most traders using indicators fail. Have you ever wondered? And then there's other advanced elements, psychology, trade plan, all kinds of stuff. And then the PDFs you can download and contributions by other traders in Trader Lab. This is what the Trader Lab is. It's a community. And if you're interested in a no-nonsense community focused on the business, then you use the link in the bottom of YouTube. You might, be able to get some benefit from the collective leverage of this community. And there is no cost for it. But I share what and how you set up alerts. Cal, the alerts in Bookmap, I have alerts that I put in here. They're connected to audio files. This says VHVN. This is LVN. That's about it in Bookmap. And then I just put them in the custom notes. This is Cloud Notes. These levels are coming off of Investor RT. So I don't have to, because this is the developing time frame. So this is all changing. So that's all automated. This I put in manually, and I put these in manually off my higher time frame charts. The other alerts are coming off of Investor RT. VPOC migration, all this kind of stuff. I have a bunch of different alerts that I use when appropriate. So I think, depending on what you're asking, that's kind of how I do it. And I need the alerts because I get focused. And I found I would miss things without putting alerts in. So it's kind of a way to keep me, because multitasking is hard for all of us. It's a good long. Now we haven't gotten here. So what do you do about it? Let's think about this. We got resistance here, and our next resistance is up here. So here's where trade plan comes in. What do you do about this? Isn't it a great question? This is how you have to know before you're in the market what you will do. It cannot be, what should I do? The answer to the what should I do question is already in your plan. If you're sitting here now and you're long and you're going, should I get out? Should I hold? Do I leave my stop under my entry? Is this just rotation, mean reversion, and I'm going to rotate, or is this going to fail? The question is legitimate. The answer cannot be known. So the plan is the answer. And yes, it may only rotate down and then go up and go to the target. Or this might be the high for the day and we never make another high and we come all the way down and take everybody out. Isn't that possible? If it is possible, then don't you have to have the answer before it happens? That's what a trade plan is about, and that's Trader Lab. You're in Bangkok? Yeah, I had a great time in Bangkok. And I was in Phuket also. Sivan. Yeah, I liked Bangkok, and the infrastructure there was great. And I have to tell you, the culture fantastic. Um, it was just so different. It was really nice. So, and the food was great. What else can I tell you? Um, the process. Dusman, as far as my trade preparation, we don't really have too much time for that, but I have a checklist I go over as far as the structures, updating my charts, looking at the ETH, but I also have a whole section on mental preparation, and my weaknesses, my own areas I've observed over the years of journaling, the things I tend to, do that cost me. And everybody should be journaling. You also, as I mentioned, should be recording yourself with software. As you narrate the live markets, you can go back and listen to yourself when you do a review, and then either match it up with the stream, which might be interesting for you to do. And you should be doing this. Your weekends and after market, you should have part of your day is planned out. So for me, my preparation is technical, psychological. I even have a tape that I made where I listen to myself and I have to explain and remind myself of what I'm going to feel, what my weaknesses are, what does not belong in the trading business, that hesitation and all the nonsense we go through. So this trade's going to be over, okay? Is that the end of the world? No. What do you do and where does the trade fail? Well, that's something that has to be in your plan. Where's our stops? Well, they're out here. And where does the trade actually fail? It's all the way down here. Do you want to give it all the way back, or do you have a trailing stop process and you just take yourself out of the trade? Remember, I'm asking you the question because the answer's not here. The answer's in your trade plan. So if you don't know what you're going to do, you got to get to work. Because the casinos don't change the game and they don't make the games up while they're playing the game. Well, let's play blackjack, but let's see, how many cards are we going to deal now? Oh, I don't know. I'm in the mood. Let's do 10. You see? That's your business model. Not predicting and not knowing where the other side's going to come in. That's the business. So if you want to be in the business, you got to solve for randomness, which means no certainty, just process. So where's our stops? Under the VWAP, we got the mid, and we have our bond auction coming up. So this might be long liquidation in front of the auction. You need to know the reports coming out. I hope you know that. That should be part of your trade prep. Please give a thumb up if you found this interesting. If you're interested in learning this process and investing in your personal development and developing the business side of trading, understanding what it is, understanding how the market works, why it does what it does, how at times, literally at times, you might get in alignment with it, trade management, structure, auction market theory, how to use a volume profile, and a lot more. Use the link in the bottom of YouTube. Come visit the Trader Lab community. Introduce yourself. Say hi. Participate. The way you learn is by participating. There's no room for ego in this business. It's not about looking good. It's about building a career, and you have to bring humility and with you and leave your ego out the door. Thanks for visiting Trader Lab, guys. Please give a thumb up and a like on the way out. If you're interested in Trader Lab, use the link in the bottom of YouTube. There is no cost. And I'd look forward to seeing you guys in the Trader Lab. Remember, this stream's available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, review, screenshot, build out your trade plan. Thanks, guys. Have a great day. And thanks for visiting the Trader Lab.